Hi, I'm Kylie Mattu. Welcome to Wealthy Millionaire. Today we're going to talk about the amount of personal loans that you can have. But a disclaimer, I'm not an accountant or a lawyer, and this video is for educational purposes only. So always be sure to consult with a professional before making any financial decisions. So how many personal loans can you have? Sometimes, unexpected life events create the need to take out multiple personal loans at once. Millions of Americans take out a loan each year to pay for an unexpected expense or to make ends meet. When you already have one personal loan and need another one, what should you do? We're going to take a look at how many personal loans that you can have at once and take a look at your options for reducing your debt. Can you have two personal loans? It's possible to take out two personal loans at once. In fact, there's no limit to how many personal loans you can have out at once. You can take out two personal loans with the same lender or get a second loan from a separate lender. However, the status of your current loan and how it affects your finances will impact the lender's decision regarding approval for a second loan. Factors such as your debt-to-income ratio and credit history, which lenders consider when accessing new loan applications. It may be negatively impacted by your prior loan. Most lenders allow individuals to take on additional loans if they pay off part of the balance of the initial loan. So lenders use your credit score to assess your payment history and determine whether you can handle a new loan. Individuals with a history of on-time loan repayments can generally secure multiple personal loans. If your credit is negatively impacted by your prior loans, you may have to look to subprime personal loans or even payday loans to take out a second loan. So let's take a look at subprime personal loan direct lenders. Traditional lenders are not an option for everyone. They can limit personal loan options depending on your credit score. And for example, banks and credit unions will only offer a loan if you have a good credit score. Anyone with subprime credit score must find an alternative source of financing. Subprime lending refers to offering loans to people with poor credit scores. Anyone with a credit score below 600 may struggle to get a loan product. This is where subprime lending comes in. If you're struggling with bad credit, turn to subprime lenders in case of a financial emergency. You can find direct lenders providing quick online payday loans. These direct lenders offer the best overall loans for people with credit challenges. You can get up to $35,000 direct loan. You can find several subprime options for personal loans: credit cards, business loans, or mortgages. However, these loans have higher interest rates because of the risk that the lender takes on. Advantages of direct subprime lenders include lower starting interest rates and the lack of prepayment penalties. For example, direct lenders can offer interest rates as low as 9.9% depending on your credit score. So how do you get multiple payday loans? Well, if you can't get approved for multiple personal loans, an easier option may be to take out multiple payday loans. These are short-term loans for a small amount, about $500. People generally get payday loans to bridge the gap between paychecks or help with unexpected expenses. Payday lenders target anyone who needs fast cash to make ends meet. These lenders are a bit more relaxed in their lending standards. However, they will still take a look at your credit report before giving you multiple payday loans. You can take multiple loans if you can provide proof that you can pay them back. Recent CFPB regulations allow borrowers to take multiple payday loans. However, unlike personal loans, some states do limit the number of payday loans that you can have. This is because payday loans put borrowers at a higher risk of increasing their debts or defaulting. One downside of getting payday loans is the short payment terms and high interest rates. If you're wondering how to get multiple payday loans, you should first worry about how to pay off multiple payday loans. If you are a credit union member, a better option may be an alternative payday loan. This small dollar loan has lower interest rates with a generous payment structure similar to traditional payday lenders. Now, how can you pay off multiple loans? No matter what kind of loans you take out, if you're not careful, you can plunge yourself into a cycle of debt. Here are some great strategies if you're struggling to pay off multiple personal loans or payday loans. Number 1, focus on paying back the high interest loans first. This way you can prevent the higher interest rate from creating a larger payment down the road. Once you have repaid all the high interest loans, you can focus on the other loan types. Number 2, reach out to your lenders to see if they have an extended repayment plan on your lower APR loans. Most lenders will accommodate your repayment plans as long as you show promise of repaying your debt. If they can push back the repayment date on your lower APR loans, this gives you time to first deal with the higher APR loans. Number 3, be open with your lender. Communicating with them more often can help you pay off the payday loans. Most lenders are understanding, so if you reassure your lender directly of your intention and plan to repay them, they may not report negatively on your credit. Number 4, focus on taking control of your finances and take action on your debt management plan. You can consolidate your debt by taking a personal loan with a low interest rate to pay some outstanding high interest personal loans or payday loan debts. Using a loan with a low interest rate to pay off high interest rate loans can save you lots of money in interest. It can also help avoid the unrelenting set of monthly payments from different lenders. What are some alternatives to personal loans? Well, personal loans can be a long-term financial commitment and work best for large planned expenses. For example, a debt consolidation loan and a loan for home renovations can both be financially beneficial, but taking them out around the same time can put you further in debt. If you want to avoid taking another personal loan, here are some alternatives. Savings. If you can delay the expense, try saving up for it first. You can try looking for other ways to make money to pay down your original loan or to help save up for the expense. A 0% interest credit card. You may be able to finance a large expense interest-free for an intro period of 1 year or longer. If you have good credit score, typically 690 or higher. Be sure to find out the APR after the introductory period ends, in case you end up making payments past that period. Next is a payment plan. Many doctors, dentists, and veterinarians allow patients to work out a payment plan. Some medical providers also make medical credit cards available to help patients with costly procedures. You can also get a secured or co-signed loan. If you've determined that a personal loan is the best option, you may have a better chance of qualifying if you can put up a collateral for a secured loan or have a friend or family member co-sign a loan for you. This is a major ask. A co-signer is on the hook for the loan, and co-signing can reduce the amount that the co-signer can independently borrow. Before you move forward with a personal loan, be sure to calculate your monthly payments and consider how they'll fit into your budget. You can take out multiple personal loans if you show promise of repaying them in accordance with the lender's terms. However, getting a second loan can trap you in a cycle of debt and affect your credit score and financial health. Just because you can take out many personal loans at once doesn't mean you should. Do your best to avoid multiple loans if at all possible. Now here are some frequently asked questions about loans. So what is a personal loan? When taking out a personal loan, you receive the loan amount as a lump sum. After receiving your money, you then pay back the loan through a set amount of payments. The time you take to pay back your loan is called your loan term. If you're looking to consolidate debt, your lender may use the loan to pay off your outstanding bills directly and then deposit any remaining loan amount into your account. Next, what is the difference between a secured versus unsecured loan? A secured loan is backed by an asset, typically your house or car, giving your lender greater confidence that you'll make loan payments on time. As a result, secured loans typically offer lower interest rates. An unsecured loan is backed by a written agreement or contract. In this case, the lender takes on a greater risk of loss, which results in slightly higher interest rates. What can I use a personal loan for? Personal loans can be used for a number of things. For example, to consolidate unpaid bills and debts. You can use the loan to pay off credit card debt, car loans, late bills, and more. This will allow you to focus on one loan rather than many outstanding debts. You can also use a personal loan to pay for unexpected expenses like car repairs, home repairs, or medical bills. Can I increase my loan amount? Well, it depends. Some lenders allow you to increase the amount on a loan you've already taken out, though many don't. Your lender might treat this circumstance like another loan application, and your interest rate could change after you apply. How many years can I take out a personal loan for? Well, most lenders offer personal loans with terms ranging from 1 to 7 years, but it can depend. So you can find loans with terms up to 25 or 30 years. Keep in mind, though, a longer loan term will increase the cost of your loan. Can multiple loans affect your credit? Too many hard inquiries will affect your credit score. Credit scores reflect and verify how recently and how often you've applied for credit. And an increase in both can, in turn, affect the interest rate available to you for a new loan. What are some alternatives to personal loans? Credit card cash advance, a home equity loan or line of credit, 0% APR credit card, or a 401k loan. Thank you for watching Wealthy Millionaire, and I'm Kylie Mattu. And remember, the more you save, the more you earn.